Hi, and welcome to another daily recap. So today I'm going to recap day 94, and it's September 5, 2024, Thursday. So today I traded just EU and GU. I stopped XAU because I just reviewed the August month, and I took four trades in XAU, and all of them were losers. And one more thing I stopped XAU is that both EU and GU I have backtested, but XAU I did not backtest. Uh, I thought the process is same. It follows a similar strategy, so I just incorporated it directly. So it led to three consecutive losses. So I just wanted to backtest XAU, gain some data, and then again relaunch it. So until then, I'll be reviewing just EU and GU from now onwards till I finish the backtesting of XAU. So you can expect the backtesting recaps. I started the backtesting, so you can expect the backtesting recaps. After around 15 to 20 days. So I'll be backtesting from Jan 2024 till September or November year to date. Okay, let's start with today's analysis. So I took two losing trades, both in EU as well as in GU, and both were good losers because it was phase A, pro internal, pro swing. So yeah, I was a bit aggressive. I chased the price. I wanted to get involved. So that led and you know there was news at 3 p.m. today. So with that news, I got stopped out in both cases. So yeah, if there was no news, possibly there would be less volatility. I could have been tagged in and it could have been profit. But since there was high impact news, uh, I was stopped out and the price actually moved in my direction because it is pro internal and it is pro swing. So this phase is a phase that I love to take losses. At the same time, I love to get involved because this phase provides the highest strike rate for me. So possibly this phase will be around in 2 to 3 days. So I just get wanted to get involved in the trades and back the profits. So this is the daily uh, of the euro dollar. The swing structure is bullish and the internal is also bullish. The fractal has stopped bearish and it has tapped into the daily demand and it has stopped bullish again. So price tapped into the high time frame supply and chopped bullish, which is a clear indication that this high has now become really weak and it has all the potential to be taken out. So daily is also supporting the phase A idea, phase A longs idea. So this is a zoomed in version and this is 4 hour. 4 hour structure is bullish and the internal is also bullish. So 4 hour is also in phase A and price has tapped into the daily demand, swept some liquidity, chalked me a boss bullish. So high probability that this bullish order flow can continue. Thing is, we the analysis may be correct, but analysis doesn't give us money. The only thing that gives us money is you execute your analysis via trading. So a trader is very much different from an analyst. It is very easy to be an analyst. You can add confidences to a trade, but being a trader is a difficult job. Now I know that the price is going to go up to take out the buy side liquidity, but I'm expecting the price to come to a certain POI. What if the price doesn't come to the POI? I must adjust myself and take trades accordingly. If I feel the if I feel very much confident that the price is going to go up, price is going to move in a particular direction, then I can be aggressive and chase the price. If not, a trader must also know when to be conservative. A trader must know when to be aggressive. So this is H1. H1, the swing structure is bullish and the internal structure is now also bullish. Pro swing run phase. And yeah, so this is the high probability POI from which I can expect the next higher low can be formed. This is the strong internal low. Pardon me, this is strong internal low, and this is the weak internal high. So what I can expect is price can make a sweep zone possible, chalk bullish, and then I can look for longs. That is one part, or the price can come down, mitigate this POI, chalk bullish, and then I can take longs. So these are the ideal conditions, but price never gives us picture perfect setups. It always makes us chase the price or sit in confusion whether to take the trade or not. It is very typical situation in daily market condition. You will get picture perfect trades only once or twice a month. So if I jump into the next slide, so I'm happy to take the longs even if the price makes a bullish sweep zone or the price continues the bullish order flow. This is a high probability POI where the higher low can be formed, but since it is the start of the run leg, I am expecting shorter pullbacks. So yeah, here you can see the price actually stopped the sell liquidity and then chalk bullish. So this is enough for me to indicate that the price can go up and take out the weak internal line. So this is my POI. I wanted at least the price to pull back to this POI, if not for this POI. So this is very short distance when compared to this one, but yeah, these are the conditions facing, and 3 out of 4 conditions met. So the POI just satisfied the 4 conditions, so that's why I didn't include this box. But still, it is a high probability criteria, so just mark. You can mark this box also. So what are the risk factors? POI is not in discount prices, or probably obviously can make a deeper internal pullback. Maybe or may not because already some sell side liquidity has been taken. And yeah, not the most convincing POIs to take trades. It's formed in Asia, right? Also not the most convincing chalk. The chalk is yeah, a bit convincing, but you can see there is some body closure, but the wick is larger than the body. So that is what was my concern. You can see these sellers coming into the action in this 1 hour, and the price started to come down. And if I jump into M15, I could see this low resistance liquidity. So this again gives me makes me slight makes me hesitate a bit slightly. But yeah, though there is this M15 lid, but this entirely looks like an low resistance liquidity where the price can slide through. Anyway, I just wanted to enter with confirmation entry, but I could have entered using M15 lid. That was some mistake that I made. Probably I won't get the trade even with the M15 lid. Yeah, you can see this is where the M15 lid was, and I would have not got the trade, but rather price made a pull back and then it made a huge push up. So this rather looks like a confirmation entry rather than a fake break. So for a fake break, probably I would expect the price to make a weak break, but here it's a body closure of huge size. So I could consider this as a confirmation entry rather than a fake break entry. But still, I just marked it just for the reference. So I took the confirmation entry and I placed my buy limit order here, and this was the target. So if the price reaches the target, then I could cancel my entry. And the price reached the entry. I mean, price reached the weak internal high. It took out the weak internal high, so there is no targets to be. A price can reverse, so it can happen. So I just cancel my order. So again, at the pre-New York session, again there was a slight pullback and then a push up. Now the price was in the 4-hour supply, but the price still didn't reach the H1 supply. So there was some space for me, some risk to reward for me to take the longs, but there is always a risk factor that the price can come down further down because there is this unmitigated POI. So this could be an inducement for the price, I mean, for this POI. And also remember, this is a fake break. So I took this is a LC2A model. So price can come all the way down, play this LC2A, and then it can push up. So there are a lot of ways in which this POI is invalid. So I could take a risk entry in this POI. So this is a POI that I was interested in taking longs. So if I had to take longs, then I had to take only M15 confirmation entries or risk entries. So my expectation was price can tap into this H1 POI and then H1 demand and then push up to this H1 supply. So from supply to demand. So that was my concept. But I also had in mind that the price can come down to take out, to tap into this POI and then it can push up because there is an LC to A, it to be played. So I was worried whether this trade could play out or not. So what I did is I did not place a confirmation entry. Rather, I just marked the 0.618 and I was for using buy stops order. So this would be a safer if the price rallies down and takes the pullback inducement. So I would not be tagged in and I could avoid a loss. Whereas I didn't follow this method in GU. In GU, I just took a risk entry, whereas in EU, I took a confirmed entry. I'll show you why. So this is where uh, so this was my risk entry which got failed. Thankfully, I didn't place the risk entry. Whereas this is the pullback inducement into this POI, high probability setup, Uh, Probably this is can be the low of the day. Yeah, there is some sell liquidity here, but with this momentum, I doubt the price can come all the way down. And with the pullback inducement, probably price can't come. That was my expectation, and I could target the H1 supplier. And yeah, I placed the trade, and price at 233, price moved in my direction slightly, and at price moved in my direction, and exactly at 3, I got stopped out. That means that is what there was the sell side liquidity which I expected the price not to take, and it actually took the sell side liquidity, both the sell side and the sell side liquidity, and struck the Asian lows and then pushed up. So news has the power to you know take out all the unliquidated liquidity. So once all the liquidity has been taken, price happily moved up in my direction. So yeah, I should have managed the trade, but I can't manage the trade after 2:30 because I have some personal work to do. So I just left the trade. So if I just left it, so the problem that I use does not have that much of slippage, so I trust my problem. So yeah, I just left the trade and it went hit my stop loss. Yeah, I just lost what I intended. I then lost extra. Yeah, that's it from EU. So yeah, I took one losser and it was a good losing day because it is face day and I was a bit conservative and I did not rush into the process. There was a beautiful entry model. I placed entry model. The only mistake that I did is did not managing the news or keeping the trade, even knowing that the trade could be, I mean, the price could write my stop losses during the news. So I think that I can correct myself, but sometimes if the price goes in my direction during the news, like it happened, some days back, if the price goes in my direction, then take profits to be easily hit within 2 to 3 candles. Sometimes news gives us, good profit. Sometimes, you know, uh, it it does the stop and process. So it is what it is. So let's jump into GU. Same. GU also I took one loss and it's again a good loser. I mean a good loser. But unlike euro dollar, I was a bit aggressive in GU. I took actually the same the EU and GU almost moved similarly on this day, but I did not take the risk entry in euro dollar. I just waited for the price to come to the 61.8 and then I decided to keep the buy stops. Whereas in GU I kept the buy limit order. So as a result, I got tagged in and I got tagged out because the price was moving to the extreme demand. So let me show you. Let's start from the daily. The daily, the swing structure is bullish. Internal is also bullish. Price actually chalked bearish, tapped into this demand and chalked bullish. So this is a sign that this high could be taken out. So 4 hour swing structure is bullish. Internal is also bullish. So 4 hour is in phase A. So I can look for some POIs here from which the price can track from and then push up to take out the weak swing high. Okay, the thing here is price actually did not close above the 4 hours internal high. It just liquidated it, but the sellers are not in high control. So again, the price started to rally up to take out the strong internal high. So in H1, the swing structure is bullish. Internal is also bullish. Longs are phase A and they are high probability to reach. So the internal structure is bullish. So this is the high probability POI, which swept liquidity has inducement, everything. It has high probability POI to look for longs for to trade the bullish order flow, but they can't expect the price to make a deeper internal pullback during the initial stages of the pro swing run, obviously. So I'm happy to take longs if the price makes a bullish sweep zone, or if the price continues the bullish order flow, I'm happy to follow the order flow and take this. Same, chasing the price was part of my plan. So I didn't go against my plan. Yeah, once the price took the buy side liquidity and then chalked bearish, for a moment I had an idea of going shorts against the weak internal high to target, expecting the price can make a deeper internal pullback to mitigate the H1 demand. But this candle was not completely printed. It was the start of the 8 a.m. candle. It was just 8-6. So if the candle has a body closure like this, then that would give me high probability to look for shorts to target the H1 POI. but you can see it was just a liquidity week. I mean, liquidity sweep. The real move was in the upward direction. So this was, fake. This is a liquidity sweep. Again, there is a buy side liquidity sweep, and the real move was on the upside. So once the real move, the price showed its real intention, all I wanted to get is bounce this VOI and get involved. This is phase A. All the boxes are ticked, and this POI is 4 out of 8 criteria. It has swept liquidity, it has displacement, it has a shift in the order flow, and it is unmitigated. So yeah, it is actually formed during the kill zones, and it has flipped the order block. So earlier, this was my POI, right? So now it has flipped it, and then price it up. So this tiny miniature point is the flip zone. So this could be the area where the price can respect it. I mean, the price could come and mitigate and then push up. So entry method, there was nothing. There was no empty lit, nothing. So all I can do is wait for the price to give a confirmation entry and then take loss. Simple. So okay. And yeah, price actually didn't come down all the way down. And again, it made one more, you know, uh, small internal boss up. So a new demand is formed. So I just want to chase the price because price can just shoot up and take out this liquidity without me. So having analyzed the price can go up and not being involved in the trade is more annoying than getting a loss. Simply, honesty stealing is more annoying getting a loss. You will later become a hindsight trader, and then hindsight trading will lead you to losing streaks because you will demote yourself. You will tell all kind of things to yourself like you're not worthy, you can't read the markets. So it's better to just chase the price and stick to your analysis and take the trade. If the price reaches the target without you, that's fine. At least I've tried to enter the market rather than just simply waiting for the perfect conditions to play out. So yeah, even this POI does not have the high probability condition. There is no H1 lead or M15 lead, but still I can enter using M15 confirmation entry. The price came down. So, but I was confident in this, LC2A, this POI. This could be a fake chalk, and this could be the pullback inducement. But I was not interested in this one. I just wanted to give a hand to this confirmation entry and see whether the price can play out and go to my take profit. So I just placed a trade on this M15 order block and I got tagged in and I got tagged out. So immediately I got tagged out within one candle itself because I know this could play out. And yeah, price actually tapped into this POI and this LC2A played out. I didn't enter into the LC2A because I hesitated a bit. So yeah, yeah, actually hesitated and I didn't get into the trade. So this is not the trade that I placed. The price went up, the price started to go up nicely. And actually, same during the news, if I had managed the trade to break even, it would have been a break even trade. Otherwise, it would have been a losing trade. But nevertheless, it is a good trading day. Actually, it made me to, it showed me how phase can be, how I need to chase the price, how I can't just simply place a trigger and happily sit, wait for the price to come into my POI. So I need to look for the price action, small, little bit pieces of price action and understand from where the price can, bounce and start the first run leg. I could have just set the trigger at the extreme high probability POI and then waited for the entire day and then said no trades today. But it's phase A, guys. It's phase A. I just want to get involved. I'm happy to take this loss because yeah, there was news. If there was no news, then yeah, it would have been a very good winner. Yeah. Nevertheless, it's a good losing day, and I'm happy to take losses on these phases. So overall, there is two losses, one on EU and one on GU. And so to see you tomorrow on another daily recap on day 95, September 6th, Thursday. Until then, cheers, guys. Bye.